Hey there, everybody. Tim from Alpha Wolf Trading coming at you with the state of the markets and a few stocks to watch for next week. We want to go over what we've got coming up for earnings next week. We can tell it's coming to the end of earnings season for this last quarter, but we still have some names that could impact certain sectors. For example, for staples, we've got a couple of those. We've got like maybe some telecom. We've got some retail for sure. Best Buy, Chewy. Chewy happens to be one of my favorite retail names. Planet. Um, let's see who else we think you got. Is that Baidu? Really stands out to me is maybe PagerDuty. I just because that was for a little bit that was kind of a not a lot of radars. That was a while back. That could be Hewlett Packard could be somewhat interesting. Um, Anything else really that stands out for me in the list of names that are reporting next week. But then we've got Labor Day weekend coming up, so I do anticipate we'll probably see some lower volume, maybe heading Friday or so, heading into the weekend. I think light trading volume, but interesting week last week with Jerome Powell. Right, we had. Powell talking tough, man. He's going to get tough on inflation. I don't know how effective he's going to be because some of these issues are beyond the Fed's control. And I think you're going to be able to slow down the economy, but I don't think necessarily you're going to be able to get inflation to come primarily because of gas. We'll see what happens. I mean, gas has pulled back. Did notice that oil energy name started to move up. So interesting to see how this all plays out. Now, last week I told the members we were coming up to 200-day moving average on a couple of in a few of the sectors, right? And we were coming up to the underside of that 200-day, and there was a strong likelihood because of the magnitude of the move that we had in such a short period of time that we were likely going to see some resistance in a pullback in a lot of these indexes, and that's exactly what we saw. Then you had the Fed talking tough on Friday, and that kind of you know increased the momentum of the pullback that we started to see. Now, how long will that continue? I've been saying for a while now that this bounce that we were having could be just a short-term, short-lived bounce, and that I we may not have seen the lows yet in the markets, especially the larger cap market. Small and micro cap, I think we have seen a good amount of damage done there over the last 15 months. I don't see that there's a whole lot of room to the downside. However, stocks tend to follow what the overall market does. And if the overall market continues to be weak, what looks like it's cheap could get cheaper, right? So that's something you always have to be aware of. However, I would also suggest that this is the opportunity that if there's some real fear or panic in the streets, this is the time that you should be buying. If you understand the company, you know the story, you are aware that nothing has changed. You're in communication with management, or at least paying attention to earnings calls, listening to what management says. Look, good companies are going to get taken out with bad companies, right? And good companies are being taken out. This is the opportunity right here. This is it. When you get fear in the markets, that creates opportunity. It puts things on sale, and it gives you the opportunity to pick up good companies for those that are patient and can wait out the turmoil. At some point, you'll be rewarded. Now, I'm not suggesting you go all in because, as I said, things that look cheap can get cheaper, right? And if that's the case, but you do put together a plan as to how many shares maybe you'd like to have and start building a position towards having that full position. I start picking up take a starter, start picking up shares, and if the market continues to be weak, identify the next area of potential support where you might want to shares, and then bring that dollar cost average down. Have the patience to wait things out. I do not think it's the end of the world. I think that we will recover from this just like we've covered before. I think that Fed gets overly aggressive. We're going to find out first week of September. Um, if they go a half a point or 3/4 point, I think if they go 3/4 point, he's probably getting a bit too aggressive, but you know, we'll see. I've been around long enough to see the Fed say one thing, that they're gonna come at it hard, and then a couple of months later that stance softens, right? So right now, talking tough. Let the markets do what the markets do, and I think a lot the markets have been, working a lot of this stuff out on its own. I think the supply chain issues that were a big deal. I mentioned this to my members a couple of weeks ago. That one of the members is an import export guy, and he's seen the shipping rates come down dramatically. We're up to like 25 grand for a container, down to 5 grand for a container shipping to China. So a lot of things that are happening. A lot of these costs are coming down, and that will bring down inflation, right? So we'll have to see supply demand, right? We're starting to see a big slowdown in housing. Um, the other component is the jobs, right? Jobs pressure. I don't know that we're going to see a big shift in unemployment simply because there are just so many jobs that need to be filled out there. So, and there are plenty of people that at this particular point in time may not want to take that job, but those jobs could fill if people get desperate and decide that they actually want to go back to work. So I don't know. It's going to be an interesting thing to watch over the next couple of months. Typically, September and August, September and October are not good months historically for the markets. So if we were to have another leg down, and maybe take out those previous lows that we put in on some of these indexes, that of course is going to scare the heck out of people, but that I guarantee you is going to be the time that you're probably should be buying with both fists, right? Hard to do, can be hard to do, but if you're doing your homework right now, studying companies, understanding their story, understanding the position of their cap structure, the strength of the cap structure, no debt, right? Continuing to grow through a COVID scenario, and continuing to grow now in a uncertain market where you've got a war going on. There are a lot of different things that are happening. Understand the companies that you own. That's the best advice I can give anybody. So let's just take real quick. BOTZ, BOTZ, which is that is a robotics and artificial intelligence, semiconductor type ETF, but primarily robotics. That's what the BOTZ is for, right? Had a little bit of a bounce, got back above the 50-day moving average. Right now is sitting on top of the 50-day. IBB biotech, which has been a sector that's been really, really beaten up for, it's probably one of the weakest sectors in this pullback. Has had a really nice bounce. It came up to the underside of the 200-day. Now we're back below the 200 and testing the top side of the 50-day moving average. We'll see. It is at an interesting area. You can see this area right here. The potential price support, if that breaks, could it go back down and test this low? Sure. I mean, that's absolutely possible. I wouldn't like to see that necessarily happen. Maybe see it come down into this area right here where you've got another area of price support. That could be interesting to have it find some support there. IWM, which is the small caps, you look at those and say, okay, got right above the 200-day, pierced it, and then now we're back below it, and we could come down and test maybe. Actually, it's testing a little area of price support right here, right now. Could go back down and test the 50-day moving average, see if that holds. If it doesn't, could go do a retest of the recent low. IYT transportation got above the 200-day moving average. Now that's pulling back, but look at the magnitude of this move in all of these sectors, right? We very short period of time. And the thing about bear markets is that when you get a bounce, they can be violent. They are vicious the way they bounce, and it scares people to think that they're missing out on getting back in. That's what you call the bear trap, right? So that everybody loads in, and then boom, you get another leg down, right? And that could be what we're looking at here. I actually kind of want to see us flush. I want to see us flush in the major industries, um, because we need to reset, right? And that's when you get these fantastic opportunities that you can make a lot of incredible money, because you're buying things that are dirt cheap. So let's see, IYT pulling back, could go down and test that 50-day moving average. QQQs came up to the underside of the 200-day. Now we're testing the top side of the 50-day moving average. Robo, which is another robotics ETF, right? And that is pulling back, testing the 50-day moving average. SMH was the semiconductors, pulling back, also testing the 50-day moving average. Now, look, if we crack the 50-day on all these things, we're likely going to see some more downside, right? S&P 500 pulling back, came up to the, yep, it did. It came up to the 200-day moving average, pulling back. Now we're going to test the top side of the 50-day. XLB building materials didn't quite get up to the 200-day moving average, but above the 50-day. A couple of big gap downs on XLB. Be interesting to see what happens there. But energy. So look at what I was talking about with energy, XLE, right? So we got gas prices coming down, but we got oil going up, right? So the XLE is looking like it might be heading towards another retest of the recent high. So if that happens, I would anticipate oil is going to be higher, right? And that could mean rising gas prices. See how that all plays out. XLF financials didn't quite get up into the 200-day, but did pull up into this area of price resistance, pulling back. We'll see how it acts at the 50-day moving average. XLI, which is the industrials, same thing, right? We actually got above the 200-day, and now we're back below the 200-day moving average, and could be coming down to test that 50-day if it acts as potential support. And then we've got XLK, that's just actually another tech ETF. XLP, which is the consumer staples. And like I said, we've got a couple of names that are reporting this week. Now, XLP is more of a safety type trade. We'll see how it acts. It's like we just got to pull back to the 200-day moving average. Looks like we're about at the top side of the 200-day moving average, and could be testing the 50-day here. XLU Utilities, which is another safety or safe haven, I guess, which has had a big run and is pulling back a little bit. Be interesting to see how these things fare over the next week or so. And then XLV Healthcare did manage to get above the 200-day, and looks like we closed below. We closed below the 50-day moving average. Not a great thing on healthcare there. Consumer discretionary pulling back after tested the 200-day. It looks like it kind of came up, tested the 200-day. That's also pulling back, looking like it might do a retest of the 50-day moving average. We got XOP, another oil and gas exploration ETF. That one also having a nice move. So the only things that you see moving up for the last week for XOP and XLE. Retail, right? We got some retail names reporting this week. We're pulling back after a pop, got pretty close to the 200-day moving average, but pulling back, testing the 50-day moving average. We'll see if that holds. And then telecom, which had taken the 200-day moving average, now is back below the 200-day. So all in all, I would say, the markets are in a definitely in a bit of a quandary right now. I wouldn't be surprised if we were to see some continued weakness into next week. And we'll see how these things react at the 50-day moving average. But as I said, this does create opportunity. Does create opportunity for companies that you like, right? That get taken out to the woodshed, and there's nothing company specific, just moving along with the market. So I like to take advantage of those opportunities. There's a couple of things I want to check out here before I talk about a couple of individual stocks, but T2108 and T2107, those are two indicators on TC2000 that have been pretty reliable for me in terms of identifying when the market is being overbought or is overbought or oversold, right? So when you get below, yes, T2108, so this is the amount of stocks that are above their 40-day price moving average, right? So when it gets up into the 70 area and above, that is an indication that things are getting frothy, right? They're getting a little frothy, and we maybe need to take a little break. And probably if you've got some nice profits, that you want to lock in some of the profits, right? Then the T2107, which is the amount of stocks that are over their 200-day. Now, we got pretty lofty on the amount of stocks that are over their 40-day, which makes sense, right? Shorter time period. And we had a nice run in the market. So we had a lot of stocks that were over their 40-day. But for the 200-day, we still have a lot of stocks that are below 2107. So that's the 200-day moving average. Now notice this got up to about 40, right? And now it's pulled back into 30 area here. And when we get below 20, right? When we get below 20 on both of those indicators, that's when things are starting to get overdone to the downside, right? So we're off, actually not that far off with the T2107. When we get into single digits, that's when things are like crazy, right? If you go back historically, you can see that each time we go back, and I'm going to go to a weekly time frame here. Each time we get into the single digits, we have this vicious snapback, that can last for quite a while. And that's when we get into the single digit area on these two indicators, that's really when I start to look to get aggressive on picking up shares of companies that I like. So right now we're sitting at, in the 30s on the T2107. We're still on the T2108. We're quite high. Now we're in the 50s, right? So we've got a long ways to go to get to single digits. So, and I'm not saying that we're going to single digits. If the markets continue to show the kind of weakness that we saw on Friday, if they continue to be spooked about the Fed being overly aggressive, then that's going to happen. There's nothing we can do about it. So, and it just needs to be prepared. So let's talk about a couple of names that I happen to like. And one of them had a video out interview this weekend with Bloomberg, SKYX. And actually, I will be doing another follow-up interview. I interviewed SKYX, back in May? when I first met with the company, look, I think this is a fantastic story. I think the opportunity is great. I think the market doesn't quite understand what this company has, but really, really something. And if you look at this charts, they IPO'd at $14 a share, traded in a box for about 3 months, and held up well in the markets overall. And then the markets, were weak, and this thing had held 1050, I think, 6 times. We're finally breaking. And once it broke, that is a technical breakdown. And what's the issue with having a technical breakdown on an IPO? You have no historical data to the left. You have nothing to identify as potential support. So you have to wait for this thing to play out, right? So once it broke, it was a waterfall. It got down to $2. It had a nice pop up into the sevens on no news. There was nothing fundamental that happened. I think there was just probably some funds that recognized that was a great opportunity and went ahead and jumped in. Since then, what's happened? They had a lockup expiration, which occurred here. 20 million shares came to market. You got 100 million shares, roughly 85 to 90 million shares outstanding. You got insider ownership of around 50 something percent, right? Held by insiders. Some talk, a couple articles that were put out about insiders dumping shares, and you don't have 50% insider ownership if people are dumping shares on a 3 million day. This day here was 19.6 million shares traded hands. This on the lockup expiration, it was 3 million shares. That dumping in the market by insiders, I don't think. So anyway, kind of a bear flag pattern here. If this thing goes back to 2, I can tell you I'm going to be very aggressive. I think the line in the sand, though, is at $3 for the stock. I think they're kind of defending it at 3. And since then, they've had ANSI certification, they've had NEMA certification, a lot of good things happening. And I think this thing is going to change. This company is going to change the face of not maybe 1, 2, possibly 3 industries. And one to definitely keep an eye on. Like I said, I did an interview. You can go to the YouTube channel that is above my head here. And if you like the video that you watch on SKYX, do us a favor and subscribe to the YouTube channel. Another one that had some news. So they had a interview on Bloomberg this weekend that debuted, and it shows their in the background. It shows the product that they are coming out with. I want to check that out. And then another stock that I like that had a pretty big event this weekend is VMAR, Vision Marine. Right, so great looking setup here from a technical standpoint, kind of a full pennant formation. If this thing can take out $8 and stay above that, that would be an impressive break on VMAR. But what you'll notice is that it has broken its long-term downtrend, right? So kind of broke, popped, consolidated, right above the 200-day moving average, had another pop, consolidating. And this weekend, they just set the record for electric motorboat over 100 miles an hour. They strapped two of their 180 horsepower outboard motors to a cigarette boat and cracked 100 miles an hour on the water with 2 electric motors. So now they hold the world record. And I think they actually, the first run, they did 104 miles an hour, did 109 today. So they beat their own record. Pretty impressive. I think this is an impressive company. Their technology for their outboard motors. We talk about electric vehicles all the time, not talking about electric motors on the water. And I think those are actually just as, if not more important with, keeping our water clean. So really exciting company there. 8 million shares in the float. Very, very, I think it's 8 million shares outstanding. Actually. Very tiny float, would not take a whole lot to get this thing going, but worth keeping an eye on. VMAR, Um, there are actually a few other names that I like. I actually just did an interview for the members on MLSS. I happen to like this story quite a bit. Uh, did you guys know that you could go to the dentist and get an injection if you're going to get, a root canal or crown or whatever? And you know how, like, for me, I've actually had that happen long ago. And you get done with the dentist, and then for like the next 3 hours, you're drooling on yourself, and you know can't eat anything, you can't drink anything because your whole face is numb. You know that there is actually a machine or a system out there that can precisely uh, put anesthesia where it needs to go precisely, so that when you're done with the procedure, you actually don't have any of that numbness or on yourself afterwards, because you were given the precise amount at the precise point that you needed. And that is what MLSS does. And now, I want to find a dentist here locally that does that, because I can tell you, I hate the drooling on myself and the biting of the tongue or cheek, whatever, because you're all numb for the next 3 hours after a procedure. That is what MLS does. And it's not just for dentists, it's also for labor. Um, you know, having children, right? I would imagine having a precise injection of where to stem that pain would be pretty important for that. But also spinal, um, you know, moving into other areas just besides dental. And, I think that's a pretty amazing technology. So I just interviewed the CEO. Yeah, members over at Alpha Wolf Trading have been able to watch that. And I'll be putting it out social in about a week. But very interesting company. I in an interesting area. I look at everything from a risk reward standpoint. Looks to me as though this has kind of been basing for last 4 months or so. Got a catalyst coming up, potentially. Well, no, they do have the catalyst coming in January. That would be PG code, I think it is, but it's for insurance coverage. Very interesting name to maybe put on your radar, keep an eye on. Um, what else? Red Cat, right? Our Red Cat Holdings, RCAT, which is a drone company. This one is acting very interesting. I mean, it pulled back a little bit, but look at where it's at. It keeps bumping up against this area of resistance. They have potentially they have a sizable contract that could be awarded at any time. And Red Cat is one of financially, they're one of the better off drone companies, U.S. drone companies. Plus, they just built out their manufacturing facility in Colorado. So, uh, very interesting story there. I think acting fairly well. Kind of has a reverse head and shoulders pattern. I think this is one to keep an eye on as well. Then there are a couple other names that I was going to bring up. I'm probably not going to do it because I want to shut this down. Not go. But there are opportunities out there that I think are fantastic opportunities for those that are patient. RCAT, SKYX, EMAR, I think are all really good examples, and MLS. And that's it. All right. So listen, if you want to see more of the CEO interviews that I do, I just want to make it real clear. I don't get compensation to do any CEO interviews. I do the interviews for the Alpha Wolf members, so that they can get a feel for who management is, what they're all about, what their vision is for their company, the strategy they plan to implement, and then, what are we doing? We're making sure, or we're following to see if they execute, do the things that they say they're going to do. Right? Investing to me is knowing the knowledge is power. So knowing what the vision is, knowing who's leading the charge, knowing their their performance record from the past, the obstacles that they've overcome from and uh, things that they've learned. Just you get a good feel for what the company is trying to accomplish. You look at the total addressable market, you look at insider participation. There are a whole bunch of things that you can do to identify a company and the cause, the things that they are doing. I mean, I look at a company like MLSS that has this technology to make really the procedure, a dental procedure, much more um, pleasant than one I currently go through, and nobody knows about it, right? The consumer is extremely powerful. So there's, as a consumer that knows that there's a procedure out there that can make your trip to the dentist not as much of a nightmare, right? Could actually make it a more pleasant experience. You would think people would want to get behind that company, right? And then there's two ways to get behind the company. You get behind the company by asking your dentist how come he doesn't have it, right? Like a $3,000 machine. Why doesn't he have it if it makes the consumer's procedure more comfortable? And then buy the stock, support the company, right? So if you help him company grow sales, right? Because you're asking your dentist to bring it in, and then you buy the stock and the stock goes up because why? They're growing sales. It's a win-win-win all the way around. You get a better procedure and you get a better and you get to participate in the company succeeding, right? So if consumers kind of viewed things a little bit differently, uh, they could actually benefit from things like this. That's really what Alpha Wolf Trading is all about. I do the interviews. I don't interview a company that I don't think is going to at some point make the investors an above average return on their investment. That's what I'm looking for, right? I'm looking for companies that have a unique product, could be disruptors, could be turnaround stories where they have had a good product, they just had the wrong leadership leading the charge, and maybe they get the new leadership in there that understands what they're doing and can put the company on the right track. So a good example of that, Duos Technology, OS, right? That's another company that I happen to like. Just reported earnings. I just did a interview with them, and I just put that out actually to social this weekend. So it's DUOT is the ticker symbol. DUOT, which is Duos Technologies, and if you look at this, uh, the trend line here has also been broken, right? Coming up to the underside of the 200-day moving average. A lot of good stuff going on here. It's another small float name, but this is a very interesting company, very interesting technology that right now they're implementing in the railroad industry, but can be used in trucking, could be used in airlines, could be used in boats, probably boating, right? I mean, there's very interesting technology there. Turnaround guy who's turned three companies around previously, come in and he's putting these guys on the right track. One other real quick one here, MAPPF. This is a penny stock, and I know stay away from penny stocks. This is a unbelievable story, an unbelievable company, unbelievable product, and I know this because of my background. Um, we've got a $1 trillion infrastructure bill that has been passed. This is a company that identifies, captures, records, and uploads the exact precise location of our underground utilities within 1 centimeter. Think about the fact that we have water lines that have been in the ground for 60 to 100 years, and we have no idea where the hell they are, right? Those plans are on paper. Um, the way we identify our underground utilities is scary. We got 35 million miles worth of underground utilities that need to be identified, need to be digitally mapped, right? In precise, I mean, we hit, I think, what was it, 500,000 utility strikes a year, annually. Here, costing this country somewhere between 30 and I've seen estimates up to 61 billion a year. 30 billion to 61 billion. This company has software that is amazing. Um, and it is only a matter of time before insurance companies, OSHA, um, construction management companies, property start figuring it out that this is something that is vital. You know, construction is very slow to make change. This is a penny stock. And I think that at some point, this is going to be $1 billion company, right? Because they have 19, or is it 20 pioneer patents. I didn't even know what a pioneer patent was. I have found out since. This is a company that has amazing technology, and there is a massive addressable market. This is a global problem, not just a U.S. problem, and these guys are positioned extremely well. Ashe Desan is it Sun Microsystems chief technology officer is, you know, over here at this little penny stock company. Got some really impressive people involved with this company. CDOT, which is Colorado Department of Transportation, has made it January 14th made it law that if you're going to do anything with CDOT, you're going to use their software by law. That's pretty impressive stuff. So take a look at some of these names and embrace the opportunities, buy these things on the cheap, right? That's it. If you guys want to learn more about Alpha Wolf Trading, come check us out at alphawolftrading.com. I'm Tim, and you can email me at tim@alphawolftrading anytime you like. Ask me any question. Ask me if you want to have me take a look at a stock. Just give my opinion. Happy to do that. And that's it. All right. Enjoy the rest of your weekend. It's going to be probably an interesting week up ahead. Don't freak out. Don't panic sell, right? Know what you own, and if it creates opportunity, add to that opportunity, right? All right. Enjoy your weekend, and I'll see y'all sometime soon.